Oh, hello. Do you think that Big Brother is watching? Or that the Illuminati are planning to take over the world? Have you had an encounter with a space alien today? Well, if the answer to those questions is yes, then grab your hat. This is tinfoil hat time. Welcome back to Tinfoil Hat Time. We are going to have a fun time this evening as we consider Let the Buyer Beware. You will notice we have a lovely fire extinguisher over here in case we need to get on fire. And I hope that you all brought geeky things like calculators, because we're going to geek out a little bit. Just a little. Like most of my tinfoil hat times, this one has a hot beginning, and I even sought some permission to talk about this one. Before we get into all that, let's say hello to everybody online. So, JJ Game, how's it going there? A few issues with Linux Mint there, folks. If anybody can read up there and give him some other thoughts. I just want to see if that machine is actually connecting on the internet or not. Hello, Daniel. Demiano, how's it going there? Happy Sunday to all. I thought there was someone else. Oh, yeah, Brian. Brian the Computer Geek. How's it going there, sir? All right. Well, as I said, we're going to be talking today about buyer beware. Or maybe, as it is often said in legal, caveat emptor. Some Latin for the day. Of course, caveat venditor is another Latin phrase. So these two phrases boil down into caveat emptor is a legal phrase meaning let the buyer beware, and caveat venditor means let the seller beware. And the reason we need to keep those in mind, hello Tom Walla, how's it going there, sir? All right, the reason we need to keep these two phrases in mind is because as we're going to dive into this. Now, the only place and we're going to talk about mostly American politics, although a lot of Western politics has this as well. But a lot of what we have in the American system, in the legal system, we have a general overarching principle called caveat venditor, meaning that let the seller beware. What it means is that any new product, this doesn't apply necessarily to a used product sold as is, but any new product happens to have some degree of warranty that it is as you are intending to buy. And that is very important because if I go out and I purchase a new computer and it simply doesn't function as a computer, there should be an implied warranty that I bought a computer, the computer doesn't work, and I should have the ability to exchange it. Now that is, by the way, why I will not buy, I will not recommend, I will not use any HP products. Because way back when Windows Vista was rolling out, they shipped a computer with Windows Vista and 500 megabytes of RAM, and you needed at least a gig to work. And the computer never worked. Even when I tried to upgrade the RAM, I mean, the thing just would never work. So I finally had to send it back to HP, and they're like, it looks like it was dropped. Well, maybe it was dropped by the Circuit City store I bought it from, but they wouldn't honor any warranty. And so as a graduate student, I bought a computer that simply wouldn't work. And you know what? If you're looking for new computers, don't buy HP. That's my recommendation. Don't buy HP. I generally use Dells. I don't mind Lenovo's, despite that whole, superfish thing. Use Lenovo's happily. I use Dells frequently. Toshiba's aren't bad. I'll use pretty much anything but HP because of that. They did not honor that. They did not ship a computer with the appropriate specs for the operating system that they forced on me, and that was kind of what happened there. So, I dig in every now and again with one of them types of grudges, and we'll see what's going on. But it wasn't always that way. We did not always have this implication. Now, the only place that caveat emptor, let the buyer beware, legally in our system works, there's actually two areas. One of those is in services that are not necessarily products, and that's going to be the subject today. The subject that's not going to talk about today, the only place you will see this is in the real estate market. If you purchase a house or a piece of real estate, you generally, as the buyer, take on all responsibility. And that's why if you're buying a house or a property, you should always pay for a very good quality home inspection, because if anything comes up, and of course, when you write up your sales agreement based upon that inspection, you have an out. If the inspector comes back and says this whole place is going to need, $30,000 worth of repairs, you have the right to either take that off of the price of the sale or not buy the house entirely because of that. And because that in real estate, you do, as the buyer, have to take on that awareness, you have to keep in mind that that it is up to you. You can't buy a house and then 6 weeks later go back and say, well, you didn't tell me about the leaky faucet. It really was your responsibility to identify the problems with the house before you bought it. Outside of weird small cases where there might be a warranty or an insurance or something, it's extremely rare in the real estate world. But the other place that I'm going to talk about today, and what made me so hot, is the banking industry. Because the banking industry doesn't really have that impliable necessity to always keep your interest. We see that in the Wells Fargo scandals. And it's funny that even just as recently as May, new legislation came out, and they're like, now a financial advisor is legally bound to operate in your best interest. Well, thank you, genius. That's kind of what I wanted anyway. So now you have some type of legal recourse if you find that they're pushing stuff for greater sales than anything else. Now we need to fix that in the rest of the world, and we're going to talk in detail about that and how I got into that. But before we do that, you need to understand that up until about the 1970s, caveat emptor, let the buyer beware, was the dominating view in the market until one man showed up. See if anybody says that. I'm going to look at the comments real quick. I'm not sure if you guys going to catch up to my stream yet or not, but I'm going to go ahead and see if anybody can pinpoint that one man for me. Can anybody tell me the man that changed it, that shifted from caveat emptor as the general American trend to caveat venditor, and basically put the more protections in for consumers? Who did that? I'm waiting. I'm probably waiting for a while because the stream's still catching up. Oh, let's see. HP sucks, agreed. All right, we have a lot of people to say HP sucks. That's awesome. Okay, well, hopefully people are going to be mentioning here in the stream as I'm saying this, hopefully. But if you are unaware of that person, let's see. Hey, I have more comments to read before I unveil the person. Sorry, your channel had changed to Linux Mint 18.2. Is that there is no refresh in Linux? Wait. My doubt is there is no refresh in Linux. What do you mean by refresh in Linux? I'm curious what you mean by that. And welcome, by the way. Okay, the person who it was, Ralph Nader, and you either love the guy or you hate the guy. So Ralph Nader published a book in the late 60s, mid to late 60s, called Unsafe at Any Speed, looking at the fact that automobiles prior to that time were essentially like death traps. And you'd enter into them, and if you exited the automobile not in a body bag, it was, in his opinion, sometimes more of a miracle. Hello, Chater. Hello, Albert Crow. Was not Jimmy Carter, actually. It was Ralph Nader. Basically, Ralph Nader dedicated his life to safety and public policy. So because of this, what ends up happening is we get this even split over this guy. And whenever you get a person this controversial, it's kind of like me, you either love me or you hate me. You're probably not in the middle. But that's okay. All right. Who likes Ralph Nader? Ralph Nader is generally really liked by the independents and generally liked by the Democrats, except for that whole Bush thing in Florida. Outside of that Bush thing in Florida, the Democratic Party tends to like Ralph Nader because he is a lot more big on the regulation that the Democratic viewpoint seems to want to like. Now, the independents like Ralph Nader because, they like Ralph Nader because they actually have functioning brains. I really think of all of the political parties, we should just dump all political parties. We should all just be independent and we should vote on the issues. So the independents like Ralph Nader because, well, I think they're kind of split. Because I really like half of what he does and I really don't like half of what he does. The biggest challenge with him is sometimes he operates on false data. So he is the guy responsible for the nutrition labels that we see. However, he went so far into the fat-free mode that he just wants to ban every bit of food. I'm not sure it's him as much as some other groups that ran with a lot of his things. But sometimes he doesn't have the right information, and that's a true thing. But independents generally tend to like him a little bit because he tends to operate in their circles. He considers each matter before making an opinion on it, and that's kind of what that is. Now, who hates him? Of course, the libertarians hate the guy because he is kind of the founder of the regulation movement in America. And this hat is hot today. I apologize. It is hot. All right. So the libertarians hate him, which is funny because I love the documentary. If you get a chance, it's on YouTube, actually. You can watch the documentary called Fathead. It's awesome. It's a comedic take on the major problems with the documentary called Super Size Me, which was just absolute crap. That documentary was stupid. But Tom Naughton did the documentary called Fathead, where, he goes in and he's talking about some things in there. But the other thing Fathead is awesome at is really identifying the major problems in the scientific and the political issues surrounding food, health, and nutrition. And so when a guy like Ralph Nader wants to get involved in public policy in those areas, what tends to happen is laws come out to say what we can and what we cannot feed to our children. And that can be a challenge. And I think that that's going too far. I think where Ralph Nader needs to stop is to stop and say the company selling a product, whether that's a big business or a little business, has to ensure some degree of safety. You will take care of all this stuff. Now, where it crosses the line in nutrition, as I have been communicating with one person on the nutrition for a little while back and forth, is that the science and the politics is so interwoven in I don't want to use the word conspiracy because there's no conspiracy about it. It's just go look at the facts. It is so wound up in falsehoods, politics, big buying out, and bullying that the entire Western diet is killing people. Unfortunately, Ralph Nader ran with a lot of that and pushed a lot of those things into policy, and that led to a lot of the things where we are now in those policy areas. Now, the other people that generally don't like Nader is the Republicans, because he sometimes questions the propriety of a big business. This is the full circle with what he started with unsafe at any speed. The reason these cars were death traps was because of cost savings. And so if a company can cut costs by $700 million by removing a safety feature, then that's a problem. Then they're basically profiting on the injury to other people. That is a problem. So you kind of have that general view, and those are just kind of generals back and forth, which is kind of cool. But is about regulation, though. Over-regulation, we need some regulation. This is why I'm not a libertarian. I think that there are some laws we need. We need some regulation. Net neutrality is awesome regulation. We need to keep it. There is regulation we need to have. But when you start introducing regulation, you have a slippery slope of what is too much regulation. So when you have full total deregulation, this favors the massive corporations, which, by the way, there are fewer and fewer of them, and they have more and more power. So total deregulation favors the large companies and puts them at a competitive major advantage over a small company that's just trying to get started. And that is a problem. All right. But overregulation is horribly bad for small businesses because they cannot meet the red tape it takes to actually get started. And so we can't take this regulation or no regulation attitude. We have to examine everything with a functioning brain and approach the issues that we need to approach. That is kind of the beginning. So that is my introduction to talking about let the buyer beware. All right, let's see if anybody guessed it or not. Let's see. Do I have a kitty? There you go. Yeah, there's a kitty with a comment. The kitty's looking at the comment feed. Look at that. Ooh. All right. Let's see. All right. Okay, so Ralph Nader, Corvair. Linux doesn't need refresh like Windows. Okay, Chater. Thanks. Okay, I'm also an independent. I completely agree about the parties. Yep. Anytime you can check some videos about Linux Mint here on Switch to Linux and Joe Collins. Yeah, I think the two of us are the two biggest Linux Mint guys on YouTube. Of course, he's huge. I'm just a little peon in this whole world. But Joe Collins has a lot of good stuff on Linux Mint as well. Hey, I was following Switch to Linux just a week and turned into a Linux user. Sweet! Woohoo! Awesome. All right, so we're going to go and have a look at a couple of articles here. So this is kind of neat. Okay, so investment advisors will be required to work on your best interest, but will the administration enforce the rule? Thanks for that little snide little throw-in in there, but you know, I mean, if this were in the Obama administration, we said, but will the Obama administration repeat the rule? Okay, guys, leave the politics out of it. This is still a scary article. I think I actually talked about this briefly in one of my Friday night news. But this is okay. This is to me. We are in a crazy world when we have to pass laws that your financial and investment advisors have to act in your best interest. Now, I looked into this a little bit more closely by digging into the actual orders and things, and this isn't nearly as broad as I was hoping it was. This deals only with like financial planners selling specific products. So it really doesn't apply to anything. But here's a challenge. The challenge is that many times banks are starting to hire sales staff rather than bankers. And that is the problem. So rather than hiring people who are good at finance or hiring people who understand how good investments work, they're trying to hire on bankers. Now, I first saw this concept probably almost a decade ago. There was a documentary out there called Maxed Out, which I think I've seen in passing on YouTube. I've never actually tried to watch it over there, so I'm not sure if it exists on YouTube truly or not. But it is called Maxed Out, and it is a fabulous documentary where, you know, then of course they're going in. It's kind of like a muckraker documentary looking at some of the challenges and the problems with debt. And so what the one gentleman on there says, who was a banker, is like the banks are hiring more people who are salespeople rather than people who are good with finance, because they don't care. They do not care if the selling of the product is a good thing or not. All they care about is the sale of the product. Okay? In other words, they're not selling you a product for your best interest. They're selling you a product for their bottom line. And that is what led me into this as a tinfoil hat time, and I'm going to discuss why in a few moments here. All right. So basically this article here is just talking about Bank of America hiring a lot more sales staff in order to cross-sell. Now, and I'll tell you that I usually do all my banking stuff just at the ATM, but every now and again I walk into the bank branches, and I'm finding anytime I walk into the bank branch, you're like, ooh, let's do an audit of your account. I'm like, no, leave my accounts alone, or I'm closing my accounts and going somewhere else. Believe it or not, I don't know why, but in State College there are almost as many banks as there are bars. I can't quite figure it out, but there's enough competition. If you start messing with my accounts, I'm going to go somewhere else. Okay, my accounts are exactly where I want my accounts. And I'm not a little sheeple. I'm not one of your sheeple that you're going to sell some stupid, expensive financial product to that I don't need. So, if I need something else, I'll come talk to you. Leave my accounts alone. So, basically, in this guy here, they're just talking about the cross sales. So, a guy comes in, and somebody comes in. Actually, there's a better article. Here's some ex-bank employees were telling. Is this the article? Yeah. Okay. So here's some bank employees were telling some of these. So this guy here, he wanted to kind of work. He was doing some stuff on, sales floors and wanted to get out of that. And so he goes into Wells Fargo. He was hired as a salesman, not as a banker. So that if a teller alerted him that a customer has just deposited a large sum of money into his checking account, he would persuade them to open the savings account. Ooh, this guy it's like the same thing. Dave Ramsey talks about this on FPU, Financial Peace University. He says, man, you go in there and you deposit $1,000 in the bank, you have oiled the machine for credit, and you're just going to be marketed to by everybody now for all their debt products. And debt products are more marketed to you than any other product, which is how scary it is. So he says, sometimes it really did help people. You can see those opportunities. But here's the problem. Is he's supposed to open 2 checking accounts each day and 8 solutions overall. It's kind of like going to Best Buy. You get in there, and if those guys at the Best Buy or, Kohl's, a lot of these retail outlets, they are given a quota of cards. And if they do not meet that quota, they will either have their hours greatly reduced or be fired entirely, because they want people who are going to upsell the products. So basically, he needs to have 8 overall solutions and 2 checking accounts every day. And then he just kind of says, so what happened is they did it kind of by self. They said, early in his career, he would phone customers to pitch new accounts. He would ask if he could send the customer some paperwork. Quote, at the time when you say yes, send me the paperwork, the account is opened, he says. We would do it all the time, not knowing the repercussions of it. So I'll simply, fine, give me the information to get this lunatic off the phone. That triggered the opening of the account, and that's what led to this Wells Fargo scandal. Wells Fargo's culture is committed to of course, Wells Fargo spokespersons. I still want to do, as a little business, do motivational posters with PR statements on the bottom. Wells Fargo's culture is committed to the best interests of our customers, providing them with the only products they want and value. You can tell if a PR person is lying if their lips are moving. Just a thought. It's much better, he says, that they don't have the sales stress than the goals. You have to deprogram yourself to push people to open accounts. Okay, so this person here is talking about the cross-selling into Wells Fargo. They said their job was to give them as little information as possible. We're going to come back to that in a moment. All right, and then let's see. They need more skills. So this person, let's see. Anytime a customer needed something, an address change, account research, etc., bankers are expected to cross-sell other products during this. As bankers, we are trying to offer solutions during our conversations with customers, but because of the high-pressure sales environment, bankers sound like car salesmen. Yep. All right. I coach people how to manage money now. So she left that crazy environment and now coaches people. This person says, we're not helping anybody. I was looking to try something different in sales field. After interviewing the job at the Associated Bank, he found what he's looking for. It's supposed to be primarily a sales-based position. Like, why? Why do we need all these salespeople in the bank? We got to be selling, but at the same time, we're not getting them into the door because they're all upset to us. Got to the point where I thought, this is not helping people, and I hate this job as it was promised. All right, so that's kind of that. Let's see. Okay, we're going to get into that article in a moment. So, all right, let's see. We got some comments over here. Let's go back over here to the comments real quick. All right. Ralph Nader's strength in his protection of the consumer rights and weakness in the discussion of political state of this country, like disparaging Donald Trump as character. All right. Sheep plus apple plus people equals sheeple. Now, sheeple is just anybody who blindly follows. Yes, I am an expert in barnyard animals. All right. And the cat's wondering what's going on. Okay. Welcome to the Switch to Paranoia channel. Woohoo! Where someone always has his tinfoil hat on. Yeah! We're going to get worse than that. Hey, Joe, how's it going? Let's see. Happened here in Canada. RBC Bank pressured agents and sales products even if customers are not good with finances. Even if the customers are not good in finances. Okay, awesome. Like, this whole talk is just falling right into place. All right. So, here is what happened this week. So, I have been teaching a young man about finances. We've been going through Dave Ramsey's Financial Peace course. And so, this week he went ahead and chatted with his bank. And so he goes in there, and he's a young person. He's got, I don't know his exact cash position, but he was very open, and he asked me this question. He says, the guy's, wanting me to do some type of account, like some market something. And I said, oh, money market account. He goes, yeah. I said, well, what's the daily limit? He says, I don't remember, it was high. So what's the interest rate? He didn't tell me. What's the fee? I don't know. Fascinating. Because according to this article that you can't see anymore, but this person says we give people as little as possible, okay? And then she says, your job is to sell. If you don't sell, we don't need you. It's very disillusioned to put on the facade, but your job is not to help the customer. It's just to sell. That's your only job, your only purpose. It was very frustrating to me because it's hard for you to say these things and to do these things the bank expects of you when you are not doing right by the customer. All right, so we are going to get geeky today. Like I said, if you follow the comment streams at the very beginning, I said we're going to get geeky. And I happen to have here my lab coat. All right. You weren't expecting this from Switch to Linux today, were you? Woo! And what's a geek without a pocket protector? And we need some glasses, yo. Oh. Let's dig in, shall we? All right, so I said to this young man 3 questions, and those are those 3 questions you should always ask. Yes, I'm going to wear this, but not for the whole time. It's already hot. Now, number 1, what is the account balance before you have to pay a fee? Number 2, what is the interest rate? And number 3, what is the monthly fee? And if I already said monthly fee, what's the amount that you don't have to pay the monthly fee? So his answers were pretty high. He didn't tell me, and I don't know. So we dug out the bank's website. I know what bank it was. I'm not going to say what bank it was, but we go into the bank, and of course they're like, it's the highest interest rate in town. So we dig out. We get on into the, we dig into it. We find the account online on the bank's website, and lo and behold, the bank's website happens to have, what is a professor without a whiteboard? The bank happens to have a limit of $10,000 before you are waived your fee. So after $10,000, you do not have a fee. Prior to that, if you cannot waive the fee, the rate is being paid $10 per month. Okay. So, you have to have $10,000 in the account to not get charged $10 per month. Now, before you think that's outrageous, that's about standard for a money market account. That's about how a money market account works. The question is, what is the interest rate? Not published anywhere. So what do? You call the bank. We called the bank, and if you happen to have less than $5,000... okay, less than $5,000, your interest rate is 0.3% APR, which means annual percentage rate. Okay? If you are greater than $5,000, your interest rate jumps to 1.09% APR. Okay. So, these are what our numbers look like. $10,000 to waive the $10 per month fee. You have a 0.3% APR less than $5,000. You have a 1.09% APR greater than $1,000. And we're going to say, because this is a kid, he's got maybe, not quite, but we're going to do our calculations based on having $1,000 in the bank. Because a kid in school doesn't make a lot of money. All right. Now, the banker, when he goes in, this kid who does not know much about this stuff, still very young, doesn't know much about any of this stuff, the banker says, we need to open for you a money market account. It has the highest interest rate in town. Caveat emptor, let the buyer beware. Let me show you what this gentleman, what this banker... the banker who's going to help this young man with his financial future told him to do. how an interest rate works. The interest rate is the annual percentage yield that is per year, okay? Annual means per year. Now, your interest is calculated per month. This means we have to take this and we have to divide it by 12. Okay, so that means that if I have 0.3, because we're dealing with less than $5,000, I'm going to divide that by 12. I am dealing with 0.025% interest per month. That's how much I'm making. Now, this is an interest rate, so when you need to calculate out the amount of money you are making on your money, you have to add your 2 zeros because this is a percent, which means per 100. So we need to divide by 100, and this is going to give us 0.00025. Did I do that one right? On 2. Okay. So 0.00025 is what you calculate. This is the number you multiply by the amount of money you have in the bank. So we're going to take this, divide by 100, just so it's in my calculator, right? 2 times 10, 2.5 e to the negative 4. That is correct. Okay, now we are going to multiply that by our $1,000, which tells me multiplying this rate by $1,000 means I am going to make $0.25, which is 25 cents on my money in this money market account. Okay? Translation. The banker who's helping this young man with his financial future told him to pay $10 per month for the privilege of making 25 cents. My advice to that young man is as soon as you can, change banks. That pisses me off. The banker is taking advantage of a young person just trying to get started in life, trying to save up for something important. And what's he going to accomplish? He's going to accomplish losing the kid $9.75 a month for the privilege of having the greatest interest rate in town. You are an unscrupulous jerk. And I hope you lose your job, get fired, and have all sorts of stuff go wrong with you. Not that I necessarily wish bad stuff on anybody, but I got news for you. When you want to take advantage of a young person, you are now in the depths of my wrath. I'm going to educate everybody about this kind of stuff. And no, I'm not going any further than education, okay? But education, it's the ability to stand there and say, you, sir, are trying to take advantage of me as a young person, and I am going to walk. And you should close your accounts, walk to the next bank down the street, and get your accounts down there instead. Let's find a break-even analysis, shall we? Anytime you're dealing with an account like this, you want to find what is called your break-even analysis. I really wish I would have brought over some paper towels. Do I have any paper towels on my... Oh, well. I'll just use my fingers. Unfortunately, this board I bought a while ago for like $1 at some crappy place, so it's not a good board. So, our break-even point, remember that our interest rates were less than $5,000, gives me 0.3% APR. And greater than 5,000 gives me a 1.09% APR. Okay? So that is kind of what our numbers were. A break-even point is the point in time in which my interest incurred equals my payment out. So what do? Well, we do algebra because we know that the amount of money that we have, which we will call the principal, okay? Actually, I'm just going to call it P because this is going to be algebra. Multiplied by the interest rate, I'm going to call this IR, interest rate, is equal to the amount of interest incurred. So we're going to make interest, well, the interest obtained. So when this equals or is greater than this, my principal will equal out. So I happen to know that that was 0.00025 is equal to 10 times P. So we're going to do this. Basic algebra, I need to isolate P. So P equals 0.00025, excuse me, whoop, I did my algebra wrong. 10 divided by 0.00025 is what we need to get to. So 10 divided by 0.00025 means that my break-even point is $40,000. So if you have $40,000 at this interest rate, you waive the fee. However, let me get the fire off of here. However, remember that over $5,000, and we think this is way over $5,000, the interest rate jumps. So I'm going to use not that. I'm going to change my interest rate to 0.0109. So now I just need to do $10,000 divided by 0.0109. My break even, I did something wrong. $10 divided by, two zeros. No, I did that right. 0.00109. 0.0109. That's right. Oh, I'm sorry. I need to divide that by 12 now. That's right. That's why I'm wrong. Okay, so do 1.09. 1.09 divided by 12. Now divided by 100. 9 times 10 to the minus 4. So 0.0009 is what we happen to have there. So now I take my 10, divide by that number. Where's my answer key? I've not used this calculator in enough time. Oh, well, we'll just do 0.0009. My break-even point is $11,000. Which means, on this particular account, considering the interest rates, the fees, and everything else, the only way this money market account makes any sense at all is if you have the full $10,000 to put into the account. That is how you do a break-even analysis. Okay? So, we're going to have a little statement here. If I can remember my little statement here. Oh, well, I can't. I had a little pithy statement there, but I can't remember it off the top of my head. Basically, it boils down to this. If you do not have enough money to waive that fee, the bank is making too much money on it. Do not let this idiot banker sell you on buying the product simply because you're, they have the highest interest rate in town. Now, there's another thing very much like this, and this is kind of like what you would experience. Like I said, this thing's very hot. I gotta get that out of here. All right, so what happens is about buying a house. People will say, some financial people will sit there and say to you, they'll say, don't pay off your house. You want the tax deduction. Okay. You can get the exact same tax deduction. It works the same way. If your house is paid off, you can get the exact same thing as if you take the same $10,000 you're paying in interest per year and give it to the Red Cross, your church, or any other 503 group that you deem worthy of having your money. You get the exact same tax benefit, only instead of the profits, instead of your extra money going to the profits of the banker, it instead goes to the good hands in whatever organization you happen to support. So it's the same math. Do a break-even analysis of these accounts. Don't let this banker talk you into it. And I got news for you. That guy that you recommended to this young person to get this stupid money market account, he's going to charge this kid $9.75 a month to have the wonderful privilege of making such a high interest rate he'll get 25 cents a month. Yeah. Not worth it. Let's go ahead and check in on the comments. I don't use a bank to keep my money under the mouse pad. There you go. How do you convert an ISO to an image? Okay. Look like Harry Anderson. Who's Harry Anderson? I don't know. Maybe. All right. Use terminal and fund command on Google. That's what I would do. Yeah. Hey, Alfactive. Great show. Thank you. Appreciate that. Rip-off. Scam. Yep. Worse than a tech support scam. Yep. I use my Exodus wallet to save. Okay. Would it be funny if I tried to boot a Linux distro off an Android tablet? Some of them might work. Just get an ARM distro. Make an Android. Yeah, that's awesome. Okay, you do better spending $10 a month buying Litcoin or Golem. Bitcoin or Golem? I don't know. Okay. I do bank with a local small bankers and credit unions. Yep. Get me the fire extinguisher. It's just out of view because of the comments. Maths, I'm confused. I'm sorry. Just trust me, man. Trust me. If you cannot meet their minimum requirement, don't do it. What do you think about putting money into IRA accounts? You should do a Roth IRA before an IRA as long as you qualify for it. And the reason is in a standard IRA account, you put pre-tax money into it, but then it grows with taxes. With a Roth IRA, you put post-tax money into it, so it grows without taxes. So when you get to the end of the life of your life, the retirement age, then if you have a traditional IRA, then anything that you withdraw, you will have to pay taxes on. With a Roth IRA, everything you withdraw is tax-free. So you want to do those, but you always want to do an IRA with a good, reputable company. Make sure it's independent of your workplaces if you can. Like if you change jobs, absolutely roll it into an independent thing and learn what you're doing in the stuff. Don't just do it on a blanket. But yeah, definitely you should be having some type of IRA accounts. After your debt is paid off, you want to focus on paying off all of your debt except your house first, and then you start investing 15% of your take-home pay into a good IRA account, preferably a Roth IRA account if you qualify. You would qualify, I think, if you make like less than $75,000 a year, I think is the number. I forget what the breakout is. Maxed Out documentary is still on YouTube. Cool. Is that weird that there are Android tablets that have Intel inside? Yeah, actually mine does, I believe. I'm pretty sure mine does. Hey, it's right here, in fact. Yep. Yeah, my tablet has Intel inside. All right. So there's what the fun with the bankers do. So the bankers like to rip off young people, I guess, all on the profit of making money and making business. And is that banker well aware that that's a bad deal for the kid? Absolutely. But he's being pushed by the higher up managers to open so many accounts. And that's just pure profit for the bank. Kid's not going to have $10,000 in an account anytime soon. He's going to lose money until he reaches $10,000. So it's way better to have non-interest-bearing account than to have an interest-bearing account that loses you a net of $9.75 a month. That is an unscrupulous guy, and I hope he loses his job and loses everything he has. I'm going to leave it at that. Because that is what it's going to take for him to have a humbling experience. It's not that I want bad on the guy. It's I want him to get humbled. I want him to know what it's like to have somebody else steal everything from you. I want him to know. Because it causes you to wake up, open your eyes, and start looking at people as people rather than units of production. Type of stuff pisses me off. Oh, of course we have the insurance. Oh, lordy, 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 insurance. Woohoo! Where can I get one of them hats? James Tucker says. I made mine. I should do a video on how I made my tinfoil hat. Basically, it's just a fedora that I've lined in tinfoil. All right, PM Dom, you have to pay taxes on profits with Roth IRA. No, you do not. That is why it is a Roth IRA. The Roth IRA code is one of the codes in the tax law. What you do is you pay tax on the money that you invest into the Roth. As it grows tax-free. You do not have any tax on the money you take out. Now, if you take money out of a Roth IRA before retirement, you will be hit with a penalty on that money. And so you have that to consider. But no, you do not have taxes with a Roth IRA. That's why A, it is capped, and B, it is limited based upon your income. It's so that people don't invest millions and millions and millions on tax-free money. That's why they're capped out at $5,000 per year. A traditional IRA, when you pull the money out, then you actually have to pay the taxes on it. But no, there is no tax on an IRA when you pull it out. Let's see. All right, let's go ahead and have a look at some life insurance policies. This is fun. So there's different types of life insurance policies. You've got whole life and you got term life. Now, all of your guys that are these captive agents selling insurance and like, the whole life is premium. I sat down once. I had my homeowner's insurance, my car insurance through the, one of these captive agents. I went to the office. I'm like, hey, let's just do an audit of the accounts. They're like looking everything over. It's like, you know what's missing? You're missing life insurance. We have this premium whole life insurance. I said, stop right there. I said, first, I don't need life insurance. I said, and second, if you ever mention whole life insurance to me again, I'm going to be walking out of your office and closing all of your accounts within 48 hours. Okay. Now, why don't I need life insurance? Very simple. See that? I'm single. Okay. I'm single. I have no real debts to my name. I have very few assets. I need a will. Okay. Actually, I think I have more assets than debts, way more assets than debts. But I need a will. Got that. Okay. But what I don't have is life insurance because there is nobody that is dependent on my income. Okay. Second thing is you want to get life insurance that will cover you while you are building up your financial profile. You do not need life insurance that covers you until the day that you die. You need life insurance that covers you until the day that you can pay for things without it. Okay? But there's so much crazy stuff on the internet. A lot of it has to do with the fact that how many companies are just using the websites to push people into their sales. And so what I wanted to look at is just comparing the things. So let me explain. Let's see. There's term life. So here is your approximate rates. So what a term life means is that you get a policy either for 5 years or for 10 years or for 15 years or for 20 years or for 30 years. Maybe 25 might be in there. But you get policies, and basically what you do is you get a term policy and you pay the same rate for the duration of that term. So for 20 years, you will pay the same rate on this. If you happen to die within that 20 years, you will get the cash value of that policy. If you cancel the thing, you don't get anything. Okay, that's what people are saying, that's a bad deal. Well, it is actually not a bad deal. Here's why. Here is a male at age 30 and annual rate estimations, and this article is not too old. These are pretty accurate. If you wanted to get $250,000 of insurance, and you should get 10 times your annual income, so this is probably pretty low. You might want the $500,000 for a typical American family. A 20-year term policy will cost you $240 per year. Translation, $20 a month. A 30-year policy, $400 per year. That's about $30-ish. I'm not doing that math right now. I got a calculator right here, but why not? I got a calculator right here. That's about $35 rounded up. The whole life for the same policy is $4,675 per year. That is $389 per month. But what do you get? Well, first thing you get is that your policy stays the same, and you get it now. It stays the same until the day that you die. Okay? Now, they build into these things what are called a cash value. But this is the misunderstood part. Because the cash value, you do not get the price of the policy plus the cash value on your death. If you maintain the policy until your death, you get the policy amount. The company gets your cash value. If you cash out the policy before your death, nobody gets the policy amount, but you get your cash value. All your cash value is, after it pays for your insurance premium and then pays a commission, it puts a small amount of the money into a separate bank account that you can then borrow against, and you have to pay back the money on your own policy with interest. Wait. So if I just take the 20-year policy, I take the full difference of that, which is like $350, and throw that into an account. I still don't have to pay interest on my own money to borrow my own money out of my own account. That's redonkulous. Now, of course, they'll come down because I'm good friends with a guy who is a captive agent for one of these things. And he's like, well, yeah, but nobody does that. That's right. Nobody does that. This is tinfoil hat time. I'm trying to teach you how to live, people. Do that. Get the term life insurance if you need it and invest some of the difference. In other words, pay off all your debt except your house first. Put 15% of your money into your retirement. Now, after you put in your 15% into retirement, don't do 20%, do 15%. If you got kids or you're planning on kids, throw some money aside for college and then dump as much extra money as you possibly can on your house. And if you need that tax deduction, go donate it to your church, to your favorite organization, or wherever else. That's what you want to do. Okay. Now, I mean, I know people who, like, lots of people misunderstand this. Lots of people look at this cash value buildup and think that when their loved one dies, they get the policy amount plus the cash value. You do not get both. You do not get both. Okay. But the banking agents, the insurance agents are going to sit here upselling you the whole life. Now, if you are dealing through a insurance broker, which means that they're looking in multiple different companies, you're likely going to be sold a term policy just because, you know, it's cheaper, better, faster. They're going to get the sale. They're going to get a small commission. If you're dealing with a captive agent, so that means you're going into an Allstate agent, you're going into a State Farm agent, you're going into a national insurance agent. This is called a captive agent. It means that they can only sell products from that company. Those captive agents are going to they're going to want to sell you on your house insurance and your car insurance and your life insurance. And they're going to try and give you this whole life insurance. Okay. Another big one is the Gerber baby food whole life policy. Just let that sink in. Buying my insurance from a baby food company. Okay. If that does not make you want to put on a tinfoil hat, you got some issues. All right. But there's a lot of misconception about here. All right. So, of course, this article here, I like some of this, but there was some of this that was a little weird. I guess it loads a little better on this computer. All right. So, of course, here's your 30-year, 50-year, here's your term prices. So you can see the major difference in the prices. And, of course, people are like, yeah, but people don't invest the difference. Yes, people, I want you to use your brain cells and invest the difference, okay? That's what I want you to do. Here's another one comparing it. Term and whole. So this is the one where they're the building up a good cash value and all this kind of stuff. The portion of the cash value can be withdrawn or borrowed during the life of the policy. Ooh. So, you get a lot of these different considerations. The fact of the matter is you do not need insurance for your whole life. You need insurance for the period of time it takes you to put yourself in financial order. You need insurance for the period of time you're paying off your house, building up your nest egg, and saving for your kids' college. That's what you need the insurance for. After you're done with all that, you don't necessarily need it. Now, some people might still want to get it. That's fine. Now, under what cases should you keep a whole life policy? If you already have a whole life policy and you have a medical condition, you will probably not be able to get a term policy. You keep your term policy. Absolutely. If you cannot get a term policy in any way, shape, or form for whatever reason, use a whole life policy. So those are the reasons you need them. But also assess, do you need it or not? Just because you are a walking human being does not mean you need life insurance. If you have no dependents, you have no spouse, no one's relying on your income, you don't need life insurance, people. Save the dollars. Save the dollars. But if you do happen to have a wife, you do happen to have a husband, you do happen to have children, you happen to have things that you need to protect, you need insurance. So figure that out. But just because you are a breathing human being does not mean you need life insurance. Okay? Oh boy, let's go back and have a look at our comments. I haven't gotten any comments. Where is everybody? Is everybody gone? All right, let's see. Oh, reverse the two. Yeah. That's common. Just do better saving money in a. Would we do better saving money on a safe at home? No, because there's this pesky little thing called inflation. If you have a good investment, you can out-earn inflation. If you don't have a good investment, like putting money in the safe at home, yeah, I mean, you should keep cash on hand available. You should keep some cash on hand, like a month cash on hand. You should keep 3 to 6 months of savings in a fairly liquid account. So one of those money market accounts, as long as you got $10,000, this is a good account. This is a good account as long as you got $10,000. Just don't open this thing without $10,000. So once you get that going, then you have you have the ability to earn the interest on it. That's a great time. But no, we don't. All right. Last topic I want to jump on to here for today. Maybe not the very, very last. But I wanted to dive into this credit card, debit card issue because there's so much misconception on this as well. A lot of it because the financial institutions are trying to push and tell us all these different things like blah, blah, blah. And the one that I hear all the time, I'm so sick of hearing this. No, use a credit card because it has more protection than a debit card. No, it doesn't, people. Stop trying to tell yourself that lie. Okay? And just for proof, because everyone always asks me that, like, I get that question a lot. Ooh, but the debit card it's taking money out of your own bank. Well, what do you think the credit card is doing? It's doing the very same thing because the money's either going to be charged to you or you're not. You do not have the option telling the credit card company, excuse me, that charge that's on there is in question, so I'm simply not going to pay the bill. They're going to ding your credit. They're going to destroy you. They're going to annoy you and send you to collections. You have to pay the money if it is on your account. But the thing is, any fraudulent account, whether it is a debit card or whether it is a credit card, whether it is a Visa or whether it is a MasterCard, you are not liable for any fraudulent charge outside of pure stupidity, such as you are holding up your card for the internet to see. Okay, that they're going to deny you. Okay. But any reasonable human being who's being reasonably secure with their card, absolutely no fraudulent charges is going to be that. It is law. The day I tell the bank a fraudulent charge was made on my account, they have to immediately put the money back in the account and then do the research. If they find the research shows that it was not fraudulent, blah, 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 they will then take the money back out. But by law, whether it is a debit card or whether it is a credit card, they have to put the money back into your account during the period of the investigation. Don't believe me? Here's Visa's website, Visa debit card. This is about your security. Visa's zero liability protection, which protects you from unauthorized charges. Any funds taken from your account due to fraudulent charges will be returned to your card. Continuous fraud monitoring to detect suspicious activity on your debit card and a 3-digit security code to verify your identity for internet or phone purchases. Okay? You do not have any issues with a debit card. If your Visa debit card is lost or stolen and fraudulent activity occurs, you are protected by Visa's zero liability policy, 100% protection from you. Now, some people will talk about the $50 minimum. That's a thing of the past. There is no $50 minimum anymore. You used to have to pay the first $50 of fraudulent activity in many cases. That has not been a thing for a long time because the two major card issuers, here's of course your MasterCard version. Again, this is debit card with MasterCard. And down here, whether you use your debit card to shop online, by phone, every purchase is backed by the zero liability protection. Yes, there's fine print. The fine print pretty much says, don't be a stupid idiot. I did read it all because, it's not exactly a lot of fine print. This is their quote-unquote fine print. Okay, if you have reasonably care in protecting your card from loss or theft and you promptly report your loss or theft to your financial institution, zero liability. You're not responsible for any of that. This is the biggest thing I hear people say. Use a credit card because a debit card takes money out of your account. The credit card does the same thing. The thing you have to get clicking in your brain is everything that goes on that credit card is still money out of your bank. You have no recourse with these banks. No recourse with these banks. Whether it's out of your account or whether it's on your credit account, you still have to pay it. You have to have that going through your head If there is a charge on this card, it is my money. Stop trying to tell yourself, but that's fraudulent from the bank. No. 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 That's not the way it is. All right. Now, I want to dive in a couple more places. This is hilarious. This article here is this big pro credit card article. Don't use it. Look, your laws are different. Okay, this is hilarious. Okay. Here's the 2 laws for credit card fraud. If your credit card number is stolen or lost, quote, you are not responsible for unauthorized charges under federal law. Okay. Blah, 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 blah. If an unauthorized charge appears in your account, but your pin has not been lost or stolen, you will not be liable if you report within 60 days. Okay, does that not sound like the same thing to you? It is. Shocking. It is. There is no difference in these. They have 4 items here and 2 here. What does that mean? Well, there's more protection on the debit card. I have a functioning brain. Do you? 11 places never pay at the pump. Yeah, you shouldn't pay with a credit card or a debit card at the pump. Thank you. Too much risk for skimmers. Any transaction or payment online. Using a credit card is much a better option. If you don't get your merchandise, you can show your chargeback within 60-day window. You can do the same thing on the debit card. Did you not read Visa's website a moment ago? At the supermarket. Like, basically, all these things are basically saying don't use a debit card, get a credit card instead. Who is this people? Do they sell credit cards? I'm curious. Do they sell credit cards? Are they paid by credit card companies? Jeez. Last thing I wanted to mention. Anyone have a corporate card? Ooh, this is fun. So the biggest pusher of corporate cards lately has been American Express. So you'll get these corporate cards. And the one company I did work for, we used to go out and, and as when there was still a small business, we'd go out, we'd save our receipts, we'd submit all our receipts, they'd pay us, they'd submit the payments back within a period of time. Now, I don't use credit cards, and so I just did everything with cash, and what you do in that case is you just build up a little cash, a cash war chest for doing your business, and then you just replenish the cash war chest when the company pays you back. Well, then we were bought out by that big corporation, and we were bought out by the huge corporation there, and then they started issuing all of these American Express corporate cards to everybody. And I got a chance to read the fine print. Now, I didn't need one because by that point in time, I was doing exclusively at-home stuff. I wasn't doing any travel. And so I didn't have to do the card, but I was so curious, so I got all the information so I could read the terms and conditions. Now, I could not find the terms and conditions on the website, and that's why I'm not linking to it right here in the article. But what happened is almost all of these corporate credit cards, if you got one of those corporate credit cards in your wallet, you're like, hey, this is a credit card, but it's the company's. Read your fine print. You are a co-signer on that debt. If the company goes belly up, they are late on their payment, whatever else happens, your credit is dinged as well. The policies on these corporate cards is joint and several liability. Now, what joint and several liability means, and particularly for you younger folks that might be looking for apartments soon, you got to watch this clause and try and negotiate your way out of it if you can. Joint and several means 2 people are entering a transaction. Both of them are fully liable and independently liable at the same time. Now, that means that in the case of rent, because it comes up here, if 2 guys rent an apartment and a rent is $1,000 a month, it's like $500 each a month. Well, if the one student, if the one guy, whatever, I use student because this is a college town, the one student loses his job, can't pay, smokes too much weed, blows it all at the bar, whatever else, doesn't have the money to pay, the other guy is responsible to come up with his half. The landlord doesn't care that sob story. And if sob story man truly has no money and you do, and you're being good and paying your half, they're just going to come and sue you instead because you got the money. Okay? And that's what joint and several liability means. Now, it means that if rent is skipped and it owes $1,000, they may not get $1,000 from you and $1,000 from them. They can sue either or both of you for the combined total of $1,000. That's what joint and severable means. But these corporate cards have joint and severable liability under almost every case. There's a few that do not, but almost every case they have joint and several liability, which means if the company goes bankrupt, goes belly up, doesn't pay the bill, is late on their fees, or any other weirdness happens, you are fully liable for every charge on that corporate card. Let that sink in for a moment. So they're talking about here, they actually do pull some quotes here. So from American Express, quote, each company or employer determines how their billing for the American Express corporate card will work. In some cases, the employees get their corporate card bill, employees submit their expense to their employer reimburses them, the employer pays American Express. In other cases, the employees get their American Express card bill submitted to their employer, who pays the card. Companies can also choose to set centrally billed account, in which case the employer receives and pays the bills designated for the cards. That doesn't tell you much about it, but if you look at American Express's page, you will find that clause about joint and several liabilities. Most instances, employees fill out the card application, which includes disclosures about the product and card member responsibilities. Let's see. American Express perspective, the individual will not be held liable. This is hilarious. They will not be held liable as long as they have fulfilled their responsibilities in managing the account. For example, they haven't used the card for personal expenses. There are times when some instances where an employee can be held liable for a corporate charges, and I was told the cardholders should defer to their cardholder agreement to determine whether that's the case. I could not get a hold of that agreement today. This is hilarious too. She also told me the corporate accounts will not appear on an employee's credit reports, quote, as long as they're in good standing. Wait, the corporate accounts will not appear on the employee's credit reports as long as the account is in good standing. Negative information about your corporate card can be reported if American Express determines you are personally liable for delinquent charges. Awesome. Bank of America, woo. You can read what they have to say. Capital One, employees, okay, Capital One, let's see. They are not reported to the bureaus, not responsible for debts. The primary and business are jointly liable for the debt, not the employees. So Capital One, there was one bank that might have been the exception. It might have been Capital One. I can't remember if that was it or not. Yeah, read the fine print of your cards, though, because pretty much all of those were doing that very thing. All right, let's go ahead and have a look at some comments here. Let's see. Let's see. The insurance topic got us all quiet. Uh-oh. All researching your insurance stuff. All right. Okay, any advice on saving while broke? I'm starting over. Save as little as possible. The best thing you can do when you're saving while you're broke is to watch your expenses. So think of it as you have a hole and you have a shovel. Okay, you're trying to fill the shovel. The fewer things that come out of that hole is the better. So you want to cut as many costs as you can. So when I did that in grad school, I actually... These were rough days. They were caveman days. I didn't have internet at home. Use the internet at work. I had key access to the building. I could get in there at 3 a.m. if I really needed the internet that bad. But figure out where all of your costs can be cut. Can you cut your costs by cutting cable? Can you eliminate subscription services? If you're that broke, do you really need Netflix to distract you from finding more work? Work a little bit extra, but save little bits. Maybe set little goals of just $5, $10 into the savings account. Just do little things like that. Ultimately, you want to try and build up about $500 to $1,000. $1,000 would be good unless you live at home or a college student or something. You get away with $500. This is an emergency fund. It's going to prevent you from going into all crazy stress out mode if something weird does happen. But just slowly build up to it. And the biggest thing first is to watch all your expenses. Cut back as many of your expenses as you possibly can. Insurance talk is more boring than Zorn OS. Everyday companies call, send, mail advertisers for what you need. And then the thing is, though, so sending you stuff that's just not relevant. I mean, it's wrong. It's just to sell you stuff. Anyone who thinks they can just max out a credit card, but then they think they don't owe any of it deserves a lower credit score. Hey, John, how's it going there? My phone carrier has just changed the policy. Not sure I understand it totally. They're saying they won't charge me for data if I'm streaming. Are you sure how? Not sure how this would work. Depending on your carrier, some of them have cut deals with some streaming services to not count that against your data caps. Debit cards. Your money will get taken. ASAP. Credit card. You are responsible for paying any legit charge. Incorrect. Incorrect on both. It is the exact same thing, though. If you have a fraudulent charge, you contact the bank immediately, which can happen in the number on the back of the card. They are required to immediately put the money back into the account while the investigation goes on. Policy, have you read the streaming services? Okay. Not read the policies, but they have been advertising this service, not charging data for streaming. Eventually want to start a phone repair service. What should I do? Watch Louis Rossman. He might shake you out of that. I don't know. Basically, start by getting some repair kit tools and see if that would work. So, like, I got a very nice full kit at Home Depot. It has every tool I need, including Apple's crazy Penelope 2 bit. It has everything you need in there to take apart a smartphone. And then just do what Louis Rossman did. Get on Craigslist and buy broken phones and see if you can successfully fix them. And then when you buy a broken phone on Craigslist, successfully fix it, turn around and sell the thing. Try that. That'll get you some practice doing some things. And you can buy a broken phone on Craigslist or eBay or something dirt cheap. So do that. Buy a few of them, swap, replace the parts, learn how to confidently open them up, close them up, get cheap smartphones, open them, tear them up, field strip them, put them back together, make sure everything works. That'll give you that practice to get started. So do that. Last time I checked, net neutrality was supposed to treat streaming the same as other data. Well, there's a difference, though, between a data cap, which is what he's talking about, and how fast the data goes. If they're limiting how fast the data goes, that could be a violation of net neutrality, but limiting the cap is not. What if the bank is the one with a fraud charge? Yeah, well, that becomes a problem. Louis Rossman, the guy from New York. Yes, Louis Rossman is the guy I would listen to. Absolutely, he is full of amazing stuff. Well, JJ Game, if you are already doing that kind of stuff, then you probably are already good. So what you'd then do is, put up a little cheap website and start letting people know about it, and maybe, go around town. You might, you got to figure out where you are, what your market is, and how you're going to get, send and receive products back and forth, things like that. Watching YouTube, that classify as streaming. It should, but you want to check the terms and conditions of that. All right, well, I think I've gone on for a little over an hour. I've hit the end of my articles. I guess maybe the last thing I could talk about on this buyer beware is let's talk about our operating systems, because this is switched to Linux. So our operating systems themselves, we have to really be aware of what those are doing. And so, if you have a Windows computer, a Mac computer, a lot of data collection, but don't think that you necessarily get a free pass on Linux. Be wary that some Linux distros will still have some things in there that are a little creepy. Some people, of course, bring up the Ubuntu issue, which isn't a real big deal for me. I've read it. Not all that concerned about it. But at the same token, we want to make sure that you are being intelligent with things. So, like, I'd avoid certain packages like WPS, because WPS has a weird EULA that's a little creepy, and it's a closed source code. So just because it's frequently on some Linux distros doesn't mean it's good. So you have a lot of those things. So consider also buyer beware. Look at your operating systems. Look at your phones. Look at your tablets. And basic things like that. I think that in those cases, we want to make sure that we have the best things going for us. Switch to different bank before you lose all your money to bogus charges. Cool guy watching other videos. Okay, what's the matter with Louis Rossman and his sexuality? He's stuck in the closet. And his sexuality, he's stuck in the closet. No. He's kind of like me. He's just doesn't really care to get married. Okay. My name might be changing to Sea Bear Repair. Cool. That's pretty sweet. You ever switch to Arch Linux? Probably. I don't know. I mean, I've played with it a few times. What is my setup? For recording, for streaming, or for just basic work? I use different ones for different setups. Basically, I use Linux Mint Cinnamon for any of my production machines just because I find it's the most stable and all that kind of stuff. For streaming, of course, I use OBS. Recording, I usually use OBS, although I might use Simple Screen Recorder, depending on the distro and what I have going on the screen. I have a Meteor mic, which is right there. It's nice, my nice Meteor mic, which I would absolutely highly recommend the Meteor mic. It has the same quality as one of the Yeti microphones, but it's like about half the price. And it's much more portable. You know, it comes with a very nice little carrying case. You can carry the thing. Actually, my cousin uses it for magic podcasts that he does because it's very easy to just carry around, very small. You can open it up and put it out, and it has its own little, kind of like little stand. If you take it off my mic stand, it has its own little stand in it. So that's that. Okay. And then, of course, when I'm streaming and oftentimes recording, I'm running on dual monitors. Heard Solus is a distro to have at the moment. I think I've looked at Solus a couple times. Nice to see the logo Sea Bear Repair. Yeah, that would be cool. Why are you so creative? I was like you. Actually, the funny thing is I'm actually not all that creative. I'm more technical. I'm a technical guy. I ask other people for creative ideas. Talking about raw vanilla arch, about niche arch distros. Okay. Email address sent to you at Demiano. All right. What editing software will you use for 4K footage? Well, if I ever get a 4K camera, I'll cross that road. Currently, I use Kdenlive. I'm pretty sure it'll probably handle 4K, but I don't know. I've never tested it. Let's see. I have not fully tested if there was a bug. So here's what happened is I was out doing a bunch of things a couple weeks ago, and I wanted to do the video. So I did a photo dump from the phone. So I plugged the phone into Linux Mint Cinnamon 18.2, and I basically just grabbed the two folders from my digital camera portion on the iPhone, and I just dropped them onto the desktop. Well, I went back into the phone, and all of the pictures were gone. Now, I tested again by just dragging individual pictures, no problem. So I'm wondering if I drag the full folders over, if it erases the folders from the phone. I'm not sure. Or maybe I just did something goofy. I've not had a chance to fully test it yet. But yeah, I did run into that weird issue. And if I encounter something about it one way or the other, I'll mention it in more detail. Okay. Put your money in a foreign bank, consider Canadian. Considering laws Donald Trump wants to bring in your money be safer. Did I make that hat? Yes, I did. No, Louis Rossman is gay. No, not to my knowledge. Spicy butthole. Okay. What video editor do I use? I use Kdenlive. And it works beautifully. I used to use OpenShot, but OpenShot had an update which made it way more complicated, but was still just as lame as Windows Live Movie Maker. Which has always been like Windows Live Movie Maker. You know, it's not like it was ever really any different, but it was easy to use. And when they pushed the update, it was just as lame as Windows Live Movie Maker, but they made it 5 times more complicated. And I said, if I'm going to learn something complicated, I'm going to learn Kdenlive. Once I learned how to use Kdenlive, it was like, I'm not going back. That was good. All right. What app are you using to transfer? I plug in the phone and I copy the files. I do not use apps or things like you can import things with like, was it PhotoPix or whatever it is? Drives me crazy. I like manual things. It's annoying that so many Android apps now fail to work properly if you unlock your bootloader or do most methods of rooting device. I've not had a rooted phone since I was using iPhones, which was 2012. Although I am done with Apple. I'm going to be done with iPhones. When my SE dies, sorry iPhone, I'm going back to Android because it's a lot easier to root them. That's kind of the direction I'm going to be moving in. When apps try to block jailbroken devices. Yeah, probably. All right, well, I think I've gotten to the end of everything here, so I think we will wrap this up. Thanks for hanging out, everybody. More comments. All right, I'll answer some more. Why not? Able to take your hat off for a second. I want to see your hair. Woo! It's all soaking wet right now because, man, is it hot in this hat. All right, most people doesn't. I purge my raw LXDE Arch nearly March for Fedora. Yeah, I think Arch is more of like a novelty fun thing. Any good cloud storage apps? You know, I'm still working on it. People have said I should look at Nextcloud. I should look at OwnCloud. I have a web server that's always on. It's a Debian-based web server in my office. So I'm probably going to put one or two of those on it. I might do OwnCloud because I actually do have the OwnCloud app on my phone. But I'm going to see. I'm going to look into it. I don't know. Help me here. I wanted to put Linux on my tablet, 2 gigs of RAM, 2 gigahertz processor, octa-core. Not sure if the touchscreen will work. Some people say Peppermint will be a good mint. Would be good mint. Would be a... I have not tested Peppermint on a touchscreen, although I love Peppermint on my little Lenovo. I do run Linux Mint on my touchscreen laptop, and it works fine, although I actually run a script at startup to disable the touchscreen because I hate touchscreens on traditional laptops. So it works, but that's it. Is that a Fedora? It is a Fedora. Yes, it is. Well, thank you. I appreciate that I have good hair. I do have a good set of hair. I used to have long hair. It's fun. All right, folks. Well, I think we're going to go ahead and wrap this up. I think the kitty's still over here, so we're going to go ahead and we're going to go ahead and show the kitty, and we're going to feed the kitty some kitty treats. That's right. You're getting some kitty treats. Oh, you know what's coming, don't you? Yes, you do. Oh, you got to stay right here, though. Say hi to the camera. Oh. Oh, right here. Nope, right here. Oh. One more, smile big for the camera. Nope, right here. There you go.